bounce back loan fraud. This video is for all the worried directors who took that loan in good faith, hearing certain things in the press and are reading certain articles, and they're worried about how they've conducted themselves. So for most directors, the bounce back loan is an absolute lifeline, okay? It substitutes a lot of income, certainly for those businesses forced to shut. However, as it was a self-certification, it was open to misuse. So the two main things to focus on is how much was applied for and what was it spent on. And I've done a green, amber, red, just so you know what would constitute fraud. So if you applied for 25% of your 2019 turnover, then it's not a problem. So that's green. If you predicted your turnover and applied for 25% of that, that's amber, because it's a bit of a grey area because you'd have to have evidence to substitute that. So again, give us a call. If you applied for £50,000 and you've never traded, you had no evidence that you were going to do that turnover, that is fraud. The second point, what was it spent on? So if it's business expenditure, wages, rent, other sort of things like that, that's green, not an issue. That's what it was designed to do. If you continue to draw dividends or paid certain creditors off rather than others, that's an amber. So again, bit of a grey area, give us a call, we'll run through it. If you transferred it all to your personal account and spent it, then that constitutes fraud. Now, all insolvency practitioners will report to the Insolvency Service all the red and the fraud cases, and they will pursue for the recovery of all those funds. So what will basically depend on what you do now. So it takes 5 minutes, it's free, give us a call, we'll run through it. On your side, in your corner, the Directors Helpline.